Hello, beautiful people. This is Freedom Fighter. Thank you for tuning into our channel, Goldilocks Global Banking News. Everybody knows that Goldilocks is the #1 source for the RVGCR. People from around the world tune in to see what Goldilocks is sharing on the RVGCR. Don't miss your chance and get your latest updates every day. So like, share, and subscribe to this channel to get your daily podcast from the Goldilocks articles on the RVGCR. Brought to you by Freedom Fighter. Hello, beautiful people. This is Freedom Fighter, and welcome to Goldilocks Global Banking News. I'm your host. Fine folks, Goldilocks is showing something that Goldilocks has been saying was going to happen for many years, and now it is here. When I say many years, I'm speaking about 3 or 4. 3 or 4 years ago, Goldilocks continuously said that as countries stop using the US dollar, ditch the US dollar, run away from the US dollar, then foreign currencies and their rates will begin to move up. We are now witnessing, Goldilocks is showing, that countries are officially making their announcements of ditching the US dollar. Iraq did. A year and a half ago they started. Vietnam did. Now other countries are doing the same thing. This is why we are witnessing what's happening in the global forex market with currencies as a result. Let's jump right into what Goldilocks is sharing today. Several countries Goldilocks is sharing in regions are actively considering and implementing what's called supply side deregulation. Folks, in layman's terms, all that is they're implementing dumping the dollar. You have heard, many of you have heard consistently that we have shared with you from Goldilocks how the US dollar has been the strongest currency in the world. Well, you all knew that already. But now it's being witnessed publicly how countries are ditching the US dollar. Folks, as long as countries have consistently used the strong US dollar for their trade and for their currency activity and their currency transactions, there was no need to utilize their own currencies. There was no need to utilize the dong, the dinar, the bolivar, you name it. Why? What for? And you had the US dollar. It's like, why buy the cow when you can have the milk for free? Have you heard of that term before? Being not even in a relationship, but as long as somebody is getting something tastes so good, they don't want to let it go. Why? It tastes so good. So here we have the US dollar tasted so good to all these countries for decades. They got spoiled. Trump came in with the tariffs. Trump came in with digital asset regulations in the U.S. Now he's taking over countries. And as Trump said in 2017, he will level the playing field because of these countries that have historically devalued their currency rates. They will not be able to do it anymore. So here we have the efforts of these countries that aim to enhance market efficiency, reduce barriers of entry into their countries to have access to their currencies, lower compliance costs, and encourage investment and innovation, potentially supporting stronger growth and in some cases contributing to the currency rates going up in value through improved fundamentals in their countries, which is higher productivity that can attract foreign investors in to strengthen their currencies. The United States, the most prominent example is where the U.S. were sweeping deregulation under the Trump administration and his core policies. India dumping the U.S. dollar. They've prioritized it as of 2026. Do you have the Indian rupee? I'm just asking a question. India officially 2026. We're only 15, 16 days into 2026, and India has announced their plans of dumping the dollar. The reforms include eliminating redundant compliance obligations attached to the U.S. dollar, faster approvals of digital payment systems outside of the U.S. dollar. Argentina, same thing. Argentina announced that they will float the Argentinian peso. They've announced regulations to dump the U.S. dollar, reduce tax deductions, imports on cars, and liberalizing its sectors in communication industry. These have stabilized the economy and will continue to stabilize the economy in Argentina. Their first primary fiscal surplus in years has occurred, with projections for further recovery this year in 2026. The European Union, same thing, dumping the dookie dollar. See, in other contexts, broader global trends, ladies and gentlemen, Goldilocks is showing that emerging markets pursuing dumping the U.S. dollar, improving their governance and business deregulation, is to accelerate the growth of their country, which will accelerate the rates on their currencies. In more advanced technologies and more advanced economies, countries will utilize their technology to dump the U.S. dollar and enhance their own currencies. These initiatives, Goldilocks is showing, reflect a global push towards the massive dumping of the U.S. dollar, country by country. The success of this could drive each country's currency rates up in value, inclusive of the reforms that each country is implementing to do this. It will increase the productivity, their investment inflows, and improved fundamentals in their countries. There will be outcomes depend heavily on the implementation of the tariffs that President Trump implemented. Goldilocks shares a classic example of this with the Reagan-era reforms here in the United States in the 80s with major tax cuts. I'm sure many of you remember this because the audience of the community is in the age range that would remember this in the 80s with the Reagan Economic Recovery Tax Act in 1981. So similarly, what President Trump is looking to implement now, especially with the Federal Reserve, all of this, folks, is generated to promote currency strength throughout the world by shifting the long-term the supply curve rightward, which is in the right direction for currencies around the world to gain their own independence and strength away from the U.S. dollar. Critics around the world, they note that poorly executed reforms with these countries will continuously lead to poor rates, weak currencies, and rates on their currencies around the world. But countries have already agreed. They've already begun to implement reforms and regulations to prepare for the change in the U.S. dollar attractiveness, because gold, silver, and other commodities are now the attractive piece, the attractive investments, the safe havens. It is well known that the U.S. dollar is losing its power. It has lost it. But it's still holding on very, very, very tightly. But with the new digital banking system, which will enable each and every one of us to exchange our currencies instantly, with instant settlements, meaning the money will be in your account immediately. This technology allows countries around the world to transact billions and trillions in currencies and immediately have access to the conversions of those currencies in their banking systems, at their ports, in their businesses. This is the ripple effect that we've consistently talked about that will take shape around the world. So as Argentina does this, as Cuba does this, as Venezuela does this, India, the US, Vietnam, Iraq, every country, you name it, it will have a profound effect on every other country and their currencies. Folks, what you are witnessing, every single update that Goldilocks shares, and we bring it to you in this podcast form, you are actually witnessing the organic creation of the RVGCR. As these reforms genuinely enhance around the world through these countries, it will continue to create further demand on each country's currencies. And through that demand, it creates more value on those currencies' rates. Think of how valuable something is. The more valuable it is, the more expensive it is. The more the demand for it, the more expensive it can be and is as well. For example, there's a high demand for Rolls Royce. There's a high demand for Bentley. There's a high demand for private jets. That doesn't mean that people can afford all of these things. That means the demand is high. So what is high? The rates, the values, the price. This is the same exact fundamentals that apply to currencies. The demand for it is up, so will the rates. The demand for it is up, so will the rates. The demand for it is up, so will the rates. As the US dollar continues to go down and these countries continue to dump it, the demand for their currencies go up. So what will happen to their currencies and their rates? You got it. They go up. This is the fundamentals. This is the Forex 101 reality. And you all are a part of it and will receive your blessings because of it. Be well, fine folks. On Saturday, the Saturday Night Dialogues, we are going to bring this week's most amazing updates by Goldilocks about what's transpiring with the RV and show you so that you're prepared in advance. Be well.
Hello, beautiful people. This is Freedom Fighter. Thank you for tuning into our channel, Goldilocks Global Banking News. Everybody knows that Goldilocks is the #1 source for the RVGCR. People from around the world tune in to see what Goldilocks is sharing on the RVGCR. Don't miss your chance to get your latest updates every day. So like, share, and subscribe to this channel to get your daily podcast from the Goldilocks articles on the RVGCR. Brought to you by Freedom Fighter.